Let me tell you something right at the start. In this business of trading, the thing that ruins most people isn't the market. The market isn't your enemy. It has no awareness of you at all. The market is pure neutrality. It reflects nothing more than the sum of all participants' beliefs in every moment. It doesn't care if you win or lose. It doesn't want to hurt you or reward you. It simply is. What destroys traders is their inability to distinguish what's truly coming from the market from what's coming from their own minds. They see the same chart you see, they hear the same noise, but their perception filters distort reality. They think they're reading the market, but they're really reading themselves. If you can't learn to interpret what the market is actually communicating, rather than what you want it to say, you'll never survive long enough to experience consistent success. Now, what do I mean by real signals? I don't mean tips from a friend, or opinions from analysts, or breaking news flashing across your screen. Those are external distractions that feed your inner need for certainty. They are not signals. Real signals are internal recognitions, moments where your mind aligns with what the market is actually doing, not what you hope it will do. The market communicates through price movement and volume, through behavior, not stories. The moment you can see that distinction clearly, you'll begin to trade from a state of objectivity. Most traders never get there. They spend their days reacting to their own emotions dressed up as logic. A price moves a tick higher, they feel excitement. A rumor spreads, they feel opportunity. But the market isn't sending them those emotions. They're generating them themselves. And that's why they fail. The chart is always truthful. Price is always a mirror. It doesn't lie. But if your perception is clouded by expectation, you'll misread the truth every single time. Have you ever been sure a stock was about to rise, only to watch it fall straight through your stop while you sat frozen? That's because you weren't following the market. You were following your belief. And belief without flexibility is the death of every trader. Hope, in particular, is lethal. Hope doesn't belong in trading because hope denies what is. When you hope, you reject the present moment. You create a psychological gap between reality and fantasy, and in that gap, all pain is born. You don't hope a trade works. You observe what is, act according to your plan, and if the signal invalidates, you exit. No second chances, no bargaining, no comforting stories. The market speaks. Your only job is to listen and respond. Simple? Yes. But simple is not easy. Because what makes it hard is not the market, it's you. Most traders can't stand uncertainty. They can't stand being wrong. They can't stand the stillness between trades. So they act over and over, trying to fill the silence with movement. The market punishes that compulsion. It cuts them to pieces, not out of cruelty, but because randomness doesn't care about their need to feel right. Patience, on the other hand, is mastery. Patience to wait for true alignment between signal and belief. Patience to do nothing when there's nothing to do. Most traders lose money not because they act too little, but because they act too much. They crave the illusion of control that comes from activity. But in the market, restraint is control. The market rewards clarity, not motion. Can you sit still when your mind screams for action? That's the real test. Real signals don't scream. They whisper. They appear as quiet consistencies in price behavior, as orderly shifts in volume, as patterns of acceptance and rejection in the flow. It's not about predicting the next headline or reacting to volatility. It's about observing how the market organizes itself and accepting what that behavior reveals. A skilled trader reads that rhythm the way a musician hears timing, or a surgeon feels precision. It's not analysis, it's awareness. When you start to see those subtle distinctions, a breakout with conviction versus a false move built on emotion, you begin to realize trading isn't about prediction at all. It's about alignment. And that realization separates the trader who thrives from the one who chases noise. Most never learn this because they're too busy seeking validation from others. They follow opinions, signals, chat rooms, and tips, forgetting that the only valid signal is the one they can perceive and act on with clarity. The worst signals you'll ever follow are the ones that bypass your own process. The trader who trades on someone else's conviction trades without an edge. He's not trading at all. He's outsourcing responsibility. And responsibility is the cornerstone of consistent performance. The professionals aren't giving away truth. They're using your psychological weakness to fuel their own profits. You can't be their tool and their rival at the same time. I learned that lesson early. I learned that awareness, not prediction, is what separates success from failure. I didn't learn it from luck or systems or tips. I learned it through observation, patience, and the discipline to stay in the present moment without attachment. Can you do the same? Or are you still looking for shortcuts to avoid the work of self-mastery? The market doesn't care about your opinions, your emotions, or your stories. The market reflects collective belief, and you can either flow with that belief or fight it. But remember, resistance to reality always hurts. The market is the most honest teacher there is. It exposes your weaknesses instantly. It rewards your discipline quietly. It shows no sympathy and no judgment. It's you who must adapt. And remember, identifying the signal isn't enough. You must manage your risk, manage your emotions, manage your attachment being right. Most traders either act too big and can't handle the loss, or act too small and sabotage their confidence. Which one are you? Wealth in trading doesn't come from one trade. It comes from repeated execution. Seeing clearly, acting decisively, cutting losses fast, and letting probability do its job. That's consistency. That's professional thinking. The truth is, most traders seek excitement, not growth. They crave the emotional high of being in more than the financial result of being right. But professionals seek balance, clarity, and freedom. They act only when the probabilities are in their favor, and when they act, they do so without hesitation, without fear, without hope, because they've accepted the one truth of the market. Anything can happen. The biggest money you'll ever make won't come from clever predictions. It'll come from sitting calmly in alignment with what the market is showing you. The market doesn't reward brilliance. It rewards neutrality. If you can strip away the noise, the ego, and the emotional need for certainty, what remains is pure perception, the only edge that truly exists. There are no guarantees here, only probabilities. But if you can live comfortably in that uncertainty, you'll finally begin to trade without fear. Hope is not a signal. It's denial. And denial has no place in a probabilistic environment. Traders lose not because they're wrong, but because they refuse to accept that being wrong is part of the process. The moment you resist that truth, you trade emotionally, not objectively. You hesitate, you bargain, you hold on to losers because your ego demands relief. But the market doesn't care. It reflects truth instantly, whether you like it or not. Trading isn't about avoiding loss. It's about accepting it without emotional disturbance. Once you can do that, you become free. Because a free trader isn't controlled by fear or hope. He's controlled by structure, belief, and discipline. And that ultimately is what separates the gambler from the professional. It's madness. A real trader understands that no single trade defines him. He knows he can always re-enter the market if the probabilities shift back in his favor. He doesn't need to plead with the market to rescue him because he's not emotionally attached to any outcome. But most traders don't think that way. They equate cutting a loss with failure, something final, humiliating, or shameful. They'd rather hold on to the illusion of being right than accept the reality of being wrong. And that's why they go broke. Have you ever held a losing trade so long that you stopped even checking your chart because it hurt too much to look? That's what psychological pain looks like when it's fueled by hope. It's not the market hurting you. It's your resistance to accepting what the market has already told you. Now, don't misunderstand me. Patience is vital in trading. But patience and hope are two entirely different mental states. Patience is an expression of discipline, grounded in awareness. It means you're waiting because your system and your perception still align with the market's behavior. Hope, on the other hand, is emotional paralysis. It's waiting because you can't stand to do anything else. Can you tell the difference in yourself? Because if you can't, the market will expose it with ruthless precision. One of the greatest psychological edges you can have as a trader is the willingness to be wrong quickly. If you enter a position and the market behavior immediately contradicts your reason for entry, that's your cue. It's time to exit. You don't argue with it, you don't rationalize it, you don't delay. You exit, reset, and allow the next opportunity to unfold. You can always re-enter if the probabilities realign. That isn't weakness, that's strength. The weak trader clings to the need to be right. The strong trader aligns with truth. The market rewards alignment, not attachment. It's astonishing how easily the mind deceives itself when money is involved. Hope, in its purest form, is denial. It's the subconscious refusal to acknowledge that the market has shifted. But the market is always in motion, always expressing collective intent. Your opinions, your predictions, your emotional investment, none of it matters. Price action reveals truth in real time. Ignoring it isn't courage, it's self-destruction. I've seen crowds of traders become intoxicated by the same story. Everyone convinced that this stock or that coin was going to the moon. The narrative is always seductive. The conviction feels contagious, but I would look at the market itself, the price behavior, the flow of participation, and see something else entirely. The demand was shallow. The conviction was emotional, not structural. So I stepped aside, or I faded it. And sure enough, the market proved me right, not because I was clever, but because I was objective. Meanwhile, the hopeful traders clung to their positions all the way down, blaming the market, bad luck, or manipulation, never realizing it was their own emotional attachment that destroyed them. Hope blinds perception. It hijacks your ability to read the market honestly. If you want to survive in this business, you must treat hope the same way a professional treats a contaminant in a sterile environment. Remove it immediately. The moment you catch yourself saying, maybe it'll bounce or it can't go much lower, that's not the market talking. That's your ego trying to protect itself from pain. Recognize that voice for what it is, the mind's desperate attempt to avoid responsibility. The market owes you nothing, not one tick, not 1 cent. If you put money on the line and the trade goes against you, the market isn't obligated to make it fair. It's not personal, it's probabilistic. Your only responsibility is to protect your capital and maintain your edge by acting on facts, not emotions. Hope is emotion. Discipline is awareness. Which do you want to guide your next decision? A successful trader isn't smarter than everyone else. He's simply more self-aware. He recognizes hope for what it is, a mental distortion, and refuses to let it influence his process. He doesn't identify with his trades. He doesn't confuse being wrong with being worthless. He accepts small losses as part of doing business. Each small loss is a cost of maintaining long-term consistency. But the trader who avoids small losses out of pride guarantees himself a catastrophic one. That's how the market separates professionals from dreamers. The market will test you every single day. It will tempt you to hope instead of act. It will seduce you into holding when you should let go, into forcing a trade when you should stay still, into believing that your willpower can influence price movement. Every time you yield to those illusions, you transfer your equity to the trader who didn't. The market is a psychological redistribution mechanism. It transfers money from the undisciplined to the disciplined. That is the unspoken law of this game. So learn to distrust hope. Treat it like a red warning light flashing on your mental dashboard. When it shows up, it's not data. It's your attachment to comfort disguising itself as analysis. Remind yourself, this is not a signal. This is not information. This is me, resisting uncertainty. Pride has no place in trading. Only truth does. The truth expressed in price. The truth reflected in your emotional state. Everything else is noise. Discipline in cutting losses isn't separate from reading signals. It's part of it. Recognizing when a trade is no longer valid is reading the market correctly. Many traders claim to understand this concept, but understanding isn't enough. You must embody it. The market is an expensive teacher, and the tuition charges for denial is steep. You can master chart patterns, indicators, and technical analysis. You can recognize accumulation, distribution, momentum shifts, but all that knowledge is meaningless if you lack the internal discipline to act when the signal turns against you. What good is identifying truth if you ignore it when it conflicts with your expectations? Have you ever found yourself thinking, it'll turn around, while the price clearly says otherwise? That's the pivotal moment, the point where professionals separate from the rest. Cutting losses isn't about courage, it's about conditioning. A disciplined trader doesn't wait for fear to force him out. He acts before fear even enters the equation. He doesn't rationalize, doesn't justify, doesn't delay. He accepts new information instantly and adjusts. The undisciplined trader, by contrast, bargains with the market. He gives it a little more time, a little more room. But every second he delays, his capital bleeds, and with it, his clarity. Here's the great illusion. Traders think they can control the market through willpower, persistence, or loyalty. They believe that if they just hold long enough, the market will reward their faith. But the market doesn't reward hope. It rewards adaptability. It rewards those who align with truth instead of resisting it. Discipline is that alignment. It means selling when you'd rather hold, admitting you're wrong when your ego wants to be right, taking a controlled loss so you don't face an uncontrolled one later. Do you struggle to admit when you're wrong? Most traders do. That's why most fail. A small loss is tuition. A large one is negligence. The difference between the two isn't luck. It's awareness. The market will always give you feedback. It will always send a signal. The only question is, will you respect it? There's an old principle. Cut your losses short and let your profits run. Everyone knows it. Few live it. Why? Because it demands a psychological reversal. Most people cut their winners out of fear and hold their losers out of hope. The disciplined trader does the opposite. He releases fear, cuts the loss, and allows his winners to unfold naturally. That reversal, the mastery of internal state over external chaos, is what defines the professional. I've seen traders with world-class technical skill go broke, because they couldn't obey their own insights. They could identify the shift in probability, but couldn't surrender their ego. Knowledge without discipline is self-sabotage. What good is reading the signal if you refuse to follow where it leads? It's like seeing the warning lights on your dashboard and driving full speed into the wall anyway. Do you really believe you'll be the one exception who breaks the rules of human nature and still makes it through? You have to understand something essential. Cutting a loss is not failure. It's strength. It's awareness in action. It's your proof that you've accepted the market's reality instead of fighting it. The trader who refuses to take a small, controlled loss will eventually face the one massive, uncontrollable loss that erases everything. The market is neutral, but to the stubborn mind, it feels merciless. It doesn't care how much you made last year, last week, or yesterday. One undisciplined moment, one act of emotional defiance can undo it all. I've seen it happen countless times, both to others and in my own experience. That's why I'll tell you this without hesitation. Discipline in cutting losses isn't optional. It's the backbone of trading psychology. Think of your capital as your mental energy, the power that allows you to express your edge. Every trade is not a battle with the market. It's a battle within yourself. Each decision tests whether your beliefs are aligned with reality or distorted by fear, hope, or pride. If you waste your capital defending a losing belief, you'll have nothing left for when true opportunity appears. Discipline means stepping aside the moment you sense your perception no longer aligns with the market's behavior. Without that ability, you'll deplete your internal energy, the mental capital that sustains confidence. And once that's gone, you're finished long before the money runs out. Ask yourself, do you want to be the trader who wins the long game by staying emotionally balanced, or the one who burns out in his first fight, trying to prove he's right? Most traders confuse stubbornness with strength. They think holding on shows conviction, when in truth it shows attachment. Real strength lies in psychological flexibility, in accepting what is instead of clinging to what should be. When you can take a loss quickly, cleanly, and without emotional resistance, that's not weakness, that's freedom. Pride, on the other hand, is the most expensive emotion in this business. Pride and discipline cannot coexist. When the pressure rises, only one of them will guide your behavior. Which one leads you? Discipline isn't a sometimes thing. It's a habitual mindset. It's not something you apply when convenient. It's something you embody. The moment your stop is hit, you exit. No internal debate, no negotiation, no storytelling. The market has spoken, and your job is to respond. That's not surrender. It's alignment. Just as a soldier follows orders to survive, the trader must follow structure to stay objective. The beauty of discipline is that it protects you from yourself. Fear, greed, hope, and pride. These are the emotional saboteurs within every trader. Discipline is the mechanism that keeps them from hijacking your process. Without it, you're their prisoner. With it, you see clearly. When you're disciplined, you no longer see what you want to see. You see what's actually there. You act instead of hesitate. And that single difference, subtle as it may seem, is the razor's edge that separates consistent traders from perpetual losers. Remember this: losses are inevitable, but destruction is optional. The disciplined trader accepts the inevitability of loss to avoid the catastrophe of ruin. The undisciplined trader rejects the small discomfort of truth and inherits the enormous pain of denial. Every trade forces a choice. Do you want the small sting now or the crushing blow later? The market will test your discipline daily. It will tempt you with the illusion of control. It will whisper reasons to hold when you should exit, to wait when you should act, to rationalize instead of respond. Each time you yield, you reinforce weakness. Each time you obey your rules, you strengthen your mental edge. Discipline isn't innate, it's built, decision by decision, trade by trade. Ask yourself honestly, how much structure have you built into your behavior? Without discipline in cutting losses, every other trading skill collapses. Analysis, timing, pattern, recognition. All worthless if you lack the internal command to execute when it matters. The finest insight in the world is useless if you can't act on it. That's why discipline isn't part of trading. It is trading. Everything else is just commentary. Tips and rumors are the enemy of that discipline. They blind you from the only truth that matters, what the market is actually doing. There's no faster way to sabotage your clarity than to trade on someone else's conviction. You might believe you've been handed privileged insight, a secret, an inside advantage, a golden whisper, but what you've really accepted is psychological dependency. You've handed over your responsibility to another voice, and the moment you do that, you lose your edge. Have you ever taken a can't-miss tip, convinced it was special, only to watch the price sink while you waited for the story to play out? That's how tips work. They feed your need for certainty, not your process for clarity. They seduce you with false confidence, and in doing so, they destroy your self-trust. The truth is, the market doesn't communicate through tips. It communicates through price and volume. Every shift in movement is raw information. Everything else, stories, rumors, headlines, is psychological noise designed to pull your focus away from reality. Why do so many traders fall for tips? Because it's easier to believe than to observe. It's easier to accept a narrative than to tolerate uncertainty. Tips are emotional narcotics. They give you the illusion of knowing, a comforting high that replaces the discomfort of not knowing. But like all highs, it fades, and the withdrawal costs real money. Rumors spread through the market the same way emotions spread through a crowd, rapidly, irrationally, contagiously. Traders rush in not because the market confirmed the signal, but because they don't want to feel left behind. And the market punishes that herd instinct every time. Have you ever bought because everyone else seemed so certain, then felt that sinking realization that you'd followed emotion, not structure? That's what happens when you let the crowd trade for you. The professionals know this. The institutions, the large players, they use the emotional impulses of the masses as liquidity. They feed the market stories, then act in the opposite direction when the crowd takes the bait. If you're chasing tips, you're not trading against the market. You're trading against professionals who understand your psychology better than you do. Do you really think they're handing you the truth out of generosity? If something sounds too good to be true in this business, it always is. Every time you take a tip, you surrender independence. You stop thinking in probabilities and start reacting emotionally. You stop observing and start hoping. That's not trading. That's servitude to someone else's belief system. Freedom in trading comes only through self-reliance. The disciplined trader trusts nothing but what he can verify through the market's behavior. Price and volume are the only unfiltered truth. Why would you exchange that for second-hand illusion? The true danger of tips and rumors isn't just that they're often wrong. It's that they disconnect you from your own perception. They dull your sensitivity to the signal. You could be watching a market showing clear weakness, price-breaking support, volume confirming selling, and yet still convince yourself it's just a shakeout. because someone told you it would rebound. That's how traders turn manageable losses into disasters. They rewrite reality to protect their emotions. Here's a truth I learned the hard way. No one gives you money in this game. No one whispers the truth for free. If you think you've been given a gift, you've probably been handed bait. The professionals don't move on chatter, they move on behavior. They watch accumulation, distribution, energy shifts in volume and price. The amateurs chase stories, always behind, always reactive, always learning too late. Which group do you want to belong to? Rumors appeal to greed. Tips appeal to laziness. Together, they erode your discipline. They promise shortcuts to avoid the discomfort of patience and self-reliance. But there are no shortcuts to trading mastery. The only path is to align with the truth of the market. And that truth exists only in observable data. Price and volume, cause and effect, action and reaction. Do you want your trading foundation to rest on illusions or on awareness? I've watched fortunes built and destroyed in this business. The men and women who built them did so not through whispers, but through clarity. They didn't chase information. They read it. They acted when their edge was present and stood aside when it wasn't. The rest, those who chased stories, confused motion with progress, belief with truth, excitement with opportunity. The market is a perfect mirror. It doesn't care about stories. It measures conviction through behavior. Tips and rumors poison that perception twice. First by draining your capital, then by destroying your self-trust. Once you stop trusting yourself, you've already lost. No matter what your account says, because from that point on, you're not trading, you're reacting. You're no longer an independent thinker, you're a participant in someone else's strategy. And in this business, pawns don't last. A real trader doesn't need tips. He doesn't crave them. He doesn't listen for them. He doesn't measure value by what others think. He observes the market, identifies behavior that aligns with his beliefs, and executes without hesitation. If the market shows strength, he buys. If it shows weakness, he sells or waits. Nothing more, nothing less. Simple, clear, objective. Every tip is a temptation to complicate that simplicity. Every rumor is a fog that clouds your perception. If you want to see clearly, you must cut them out completely. And be warned, the market's sense of irony is cruel. Occasionally, a tip will work. And that success, that small victory, becomes the trap. It conditions you to trust the next one. You start leaning on it, confident, comfortable, and then the failure comes. And when it does, it's not small. It's the big one. The one you never saw coming because you were blinded by the illusion of certainty. If you truly want to test yourself as a trader, strip away all external influence. No tips, no rumors, no opinions. Just the market and your process. Watch the price. Watch the volume. Watch your mind's reactions. That's where truth lives, not in whispers, but in awareness.